Welcome back to Market on Close. Let's bring in our next guest. That's going to be Phil Strebel, Chief Market Strategist at Blue Line Futures. Welcome back to the show, Phil.
Yeah, thanks for having me, Tom. Haven't been on with you in quite a while, so it's nice to be back talking with you.
Perfect timing on a Friday to get your thoughts here. 4-session rally here for the S&P 500 to wrap up the week. It seems like we're back, right, Phil?
Yeah, it's quite an impressive rally in the markets. They do feel calmer because of the fact that we've been rising for 4 straight days. But if you look at the average true range over the last 10 days, the S&P 500 is moving about 146 points a day. So there is some degree of volatility in there that's still embedded in the markets. It seems like we are starting to move a bit past the tariff discussion. You know, Jerome Powell, being cemented back into his role. I think that we get some ease and some calmness of the markets. And it would be really nice if we could focus on key things like earnings and economic data that comes out and really have that be the driver of the market and not some tweet that comes out that gyrates things so much.
Yeah, that's what we want. I don't know if we're going to continue to get it here, Phil, but hopefully it continues the way that it has the last few sessions here. But you make that good point about the tariff headline risk that's out there. It could come up at any point, so you've still got to be cognizant of that, right?
Yeah, you do. And that's why we're seeing just these air pockets where the market just seems to deflate so quickly. So I think really your critical level of resistance, your next one on the upside in the S&P is about 5,700, then about 5,800 above that. This 5,500, it was so difficult to get through. It'd be nice if we can hold end the week strong, end the week above it, and then we can build from there as a level of support. But below this, it seems like it's quite a big decline where we'd be down at 5,100 or even 5,000 as your second level of support.
Yeah, I mean, think about it. Just a week and a half ago, we were down at those levels under 5,000 in the S&P 500. So nice comeback. Still down about 10% from those all-time highs that we saw in February. But, other asset classes that are moving, gold coming off its all-time highs, Phil, is this an opportunity? Because it seems like the gold bugs have been hibernating the last couple sessions after hitting those highs.
Yeah, it was the rotation and it was the frothiness at the top. I mean, how many days can gold go up $100 in a row? It seemed like, it's not like pork bellies or something where it's like so scarce and limited supply. So there was a bit of froth in that market, and you saw this rotation. Whereas the equities start to establish themselves, start to run back up, you'll see people rotate out of gold and back into other asset classes. Typically, when you get a pandemic type of event, something like COVID, the financial crisis, and even the tariffs that we have right now, and we come out of that, gold has performed quite well into it. And then once you get that first interest rate cut, we come out of the problem at hand, and then we start to focus on a snapback in industrial demand. That's where markets like copper and silver will outperform gold, and you'll see silver, that gold-silver ratio, drop back down and get back into those mid-80s.
Yeah, you look at this, if it gets back below 3,300 on gold futures, I mean, does that actually almost spur buyers at some point? Because it seemed like everything was moving that way with central banks buying it. Now the retail's flooding in at this point. That's what got me worried when it was hitting all-time highs this week is now I see the retail trader getting more and more involved in this product, maybe to shield themselves from some of the weakness that we saw in equities. But now that we're starting to see a little bit of bump back up in equities, are they still going to be that willing to purchase gold if everything starts to calm down?
Yeah, I think that, now gold has established itself as something that people should have in their portfolios, whether it be just 0.5%, on going up to a full position. But you look at the key levels of support, you got to go with old resistance as the new support levels. And the fact that we haven't been this high so long, it doesn't have that back testing that you have in many other markets. So I think 32.65, your first level of support on gold, and then 32.02 is going to be your second level of support. You really don't want to see that market break much below that because it could be a bigger washout and it could be a risk on in other asset classes.
Yep, and the amount that gold's above its 50-day moving average, the 50-day moving average 3,065. So big gap down there, but that has been support the last few months there in gold. Let's pivot over to Bitcoin because the risk on continues in that product back above 59 or 95,000 at this point. Phil, is this the signaling the everything's okay type of situation here in Bitcoin.
So that was the first one that started to break out. When it was on April 21st, we saw that market break out to the upside. And that's when gold futures were still hovering right near those all-time highs. And I think what people were saying was they were just looking for an alternative to gold. So they started buying Bitcoin. And if you look at key technicals, you go back from January, we're about 110,000, and you just draw a downward sloping line to last week down to about 85,000. You could see that technically we broke above it. We're starting to continue to move higher. We're just a stone's throw away from 100,000. I think that that'll start to grab headlines again. Unfortunately, if there is a risk-off sentiment in U.S. equities, Bitcoin futures could fall pretty fast, in response. The other thing is like, who's buying this Bitcoin? Is it being used to get around paying tariffs and things like that?
Yeah.
That's like a whole other topic of discussion.
Yep, sub-investment topic there on Bitcoin. But I think to your point, watch out for volatility in every asset class at this point because it can get triggered at any point. All right, great discussion, Phil. Have a great weekend.
Yeah, you too. Take care, Tom.
All right, that's Phil Strebel, Chief Market Strategist at Blue Line Futures, joining us. But coming up.